Okay, so let's talk about natural gas. These videos don't have to be long. It is Sunday night after all. Let's have a look at this gas weekly chart. This is the key chart, and use this to frame your sort of picture. As you know, the $2 to the $4 level is the sort of average price range for natural gas over decades and decades and decades. We're now at the bottom of that range, just around about $2, and you can see where those two green arrows are representing the prices where I bought natural gas on this last move down. This beige channel that I've got drawn in is a very long-term channel. It's a bit of a sort of a blag. If you're from England, you'll know what blagging means. It's sort of a blag channel, but it does touch the highs and the lows of these big moves we saw recently. And if we zoom into where we are at the moment, I've shown this on previous videos, you can see how we've traded in this channel. We broke down through that support, the channel line over there. We came up underneath, touched the top, broke through it, touched the top, came back to the bottom, touched the top, back to the bottom now. So as long as we stay within this range, not only is it the channel, but it's the long-term bottom end of the range. And these three green blocks here, the support and resistance zones and the order blocks, are drawn in automatically by the software that I've used. I pointed out before. It's called MSB-OB. I believe the OB stands for order block, was pointed out to me, and you need to change the default apparently to 0.273. This just draws in those levels automatically, so you don't have to bother with doing it yourself. It's pretty accurate. So we're at the bottom of this range, and those two green arrows represent our entry points. We could trade down into the next support block, which is at around about the 1.5 level, and it's difficult to show on this chart. There we go. You can see it right there. But for the moment, we're holding in the second block. We've got another one above us, and then this big resistance zone where I put a big question mark. In extreme cases, we could get up to the $5 and more level, but that would be an extreme event brought about by some sort of calamitous political or economic event. So whilst that's incredibly unlikely at this point, don't rule it out. The same with any drops down to 1.5 or lower. I think pretty unlikely, but don't rule them out. Let's zoom into the day chart to get some more clarity. There's that order block and support level that we talked about before. We're right on top of it now. And there are our two entry levels at around about 211 and 206 or thereabouts. The average entry price about 209. I've still got plenty of ammo to add to this trade if we drop lower, so I haven't fully committed to this position yet. So trade it as you wish, but I do think there's a potential for a drop down to below $2 to 180 and maybe even 150, and in an extreme event below 150. So keep that in mind and trade this very carefully. A move and a close below $2 could see a lot of stops being triggered and a lot of fresh short positions being put on, and we could see quite a dramatic move. So keep that in mind. However, for now, I'm still pretty optimistic that we'll hold above $2. Those might be my famous last words. Anyway, let's zoom in a little bit onto the 4-hour chart. Those are our two entries going back to the 26th of January and the end of January. We're really just trading sideways, holding up quite well. I do like this little 4-hour spike low candle or wick low, holding above that support level at just above $2. But we're still below the 20-period moving average on the 4-hour, well below the 50, and this resistance line at about 215. And we've got a long way to go before we get up to the 100 and the 200. That would take us up to about 240 to 245. If I zoom even further out on the 4-hour chart, you can see where the top of the channel is. This is our target, by the way, at around about $3 initially. That is now the top of this channel. Let's go back to the day chart. So that channel's come all the way down into this order block and resistance level, this red block. And that's at about $3. Actually, it's slightly below, about $2.90 now. And whilst I think we're going to have to break up through the top of this channel, I'm not sure it's going to be very soon. We've got seasonal considerations coming up. We've got a bit of overstocking and potentially oversupply. I think there's going to be continued downward pressure on this unless we see geopolitical and economic events sort of overturning this overall picture. Still looks a bit suppressed. I do think we could get up to $2.80, $2.90, maybe $3. But by the time we start moving up here, this channel line will continue to move down, and we should probably look to the edge of this order block, and that's at about 287 maximum for now. That gives us about 80 cents from where we are now, which is a good move, but I will be watching this level very closely and potentially even looking to go short.